Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to talk about the 3 new stocks that I cannot wait to buy during this market correction and add to my portfolio. These stocks are PayPal, Netflix, and Amazon. I am a customer of these companies and really enjoy their services. However, the stock price of these companies, in my opinion, were expensive and overvalued for my investment objectives, which is beating S&P 500 in the next 10 years in terms of the returns, and therefore I couldn't justify buying these companies in the past. However, during this market correction, these stocks experienced a significant drop in their share price, and in my opinion, they are massively undervalued at the moment. In this video, I will talk a little bit about each stock and will then explain my strategy for buying these stocks during the next few weeks. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell these stocks. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. The first company that I will probably buy its shares during this market correction is PayPal. I think all of us are familiar with PayPal services. PayPal simply enables digital payments between merchants and consumers and also between friends and families worldwide. PayPal also owns Venmo, which together with PayPal are two of the most popular and most downloaded finance apps in Google, Android Play Store and Apple Store. PayPal supports over 100 currencies and withdraw funds to the bank accounts in 56 currencies, which shows the global scope of PayPal business. While there is competition, I think PayPal has a significant moat in digital payment processing business, and most of the businesses and consumers trust the brand of PayPal for their digital transactions, and trust is a big moat in digital payment world. For example, I used to work for Samsung as a developer, and the only way that I could receive my salary was through PayPal with them. No other digital payment platform. And this is the moat that I talked about before. I would like to discuss PayPal business in more detail in a separate video on this channel in the future, so stay tuned for that video. At the moment, PayPal doesn't pay a dividend. The market capitalization of the company is around 92 billion US dollar, and the shares are traded on Nasdaq for almost 80 US dollar at the time of recording this video. After 2 disappointing earnings report, the shares of PayPal dropped almost 75% from its all-time high in the most recent market correction, from $310 per share to $80 per share in less than 1 year, which is insane. After showing slower growth numbers, PayPal trading at 26 price to earning ratio, 16 price to cash flow, and 4.5 price to book ratio, which are all at its lowest numbers and the cheapest valuation compared to the PayPal share price in the last few years, and especially the 5-year average of PayPal. Even in the worst case scenario, I think PayPal will continue to grow its business and EPS numbers, and according to my own discounted cash flow model, which I will be discussing in detail in the upcoming video, I think the stock is undervalued by a good margin of safety for 15% return year over year. I will be a buyer of PayPal shares at this price and will start to dollar cost average into the stock as a new addition to my portfolio. The second company that I will probably buy its shares in the next few weeks is Netflix. Entertainment business is a tricky one, and I usually try to avoid such stocks due to strong competition, volatility of the sector, and unpredictable earnings of the entertainment companies. However, Netflix is a quality business. I love Netflix series and movies as a customer. I also have Prime and Crave, but I think Netflix platform is by far the best streaming service I ever used. As a company, yes, they reported really disappointing numbers in the recent earnings report, and they are in a tough spot as the competition is stronger than ever for streaming services. However, the stock sell-off was absolutely insane for Netflix, and the shares dropped from $700 US dollar less than 6 months ago to $180, which is a 75% drop from its all-time high. I would never touch Netflix at $700, but after this huge sell-off, I think the valuation of the stock at 16 price to earning ratio is enticing. I think if Netflix can improve their margins and potentially start new revenue streams like advertisement on their platform, they can navigate themselves through these difficult times and grow their business again. Investing in a company during this type of challenging times is a risky move if you don't trust the management of the company. But I am fine with taking this risk with a quality business like Netflix. I think they don't necessarily need to grow their users too much at this point, as they are already so big. But if they can improve their margins, the Netflix stock will be fine. I will probably start a small stake in Netflix in the next few weeks and continue to dollar cost average into this company if the stock falls more in the price. The last company that I will probably buy its shares during this market correction is Amazon. I don't need to introduce Amazon business, as you already know about their e-commerce platform, their cloud business or AWS, their streaming business, their retail business, and even their advertisement business. Owning Amazon is like buying into an ETF, as you basically expose yourself to various income streams of the company. Amazon, much like Google, Brookfield, Tencent, and Alibaba, is a spawner. And by that I mean they use their main business profits to invest in new and risky projects that can be an independent and new source of income for the company in the future. Amazon balance sheet may not show the best cash flow and EPS numbers, as they heavily invest capital into their own business to grow even faster. I love the way the management of Amazon think, and as such I strongly believe in the future of Amazon, and particularly in its risky bets. Amazon shares fell from $3,700 to $2,100, which means almost 45% decline in less than 1 year. In my opinion, Amazon is like PayPal and Netflix. It is undervalued at the moment, in my opinion. Yes, it has a relatively higher price to earning ratio. It has a current negative cash flow, but you have to consider Amazon business model and the potential cash flow and EPS growth of this company in the future, which is insane in my opinion. At a little bit lower share price, I will be a buyer of Amazon during this market correction for sure. There you are guys, these are the 3 new growth stocks that I will probably buy in the next few weeks. If the prices of course remain relatively the same or goes lower than this. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.